Hey there everyone, welcome back to my channel, and today we're gonna talk about my top 5 indicators for trading on the Binance exchange. But before that, don't forget subscribe to my channel, follow my Instagram page and my Twitter page, and also recently I started my Telegram channel as well, so you can join me there as well. You can find all the links down below the video. Alright, now as usual, let's go and check my current balance for today. So we go back to my wallet, click on the spot. And as you see, I have here 96 USDT. Okay, so for those who's watching me first time, this is my second account, which I call a trading account. So basically over here, I'm showing my trade with some small amounts, and I'm investing here almost every week, about 50, 100 or 200 euros, and sharing my trading strategies, okay? And also I have my main account where I'm investing in the long term. I have there about 20,000 USDT for now. You can find all that information in my Instagram and Twitter pages, because I'm posting there every week my weekly balance overviews on my Binance account. Okay, so let's go now into the trade. Click on the spot. And we're gonna have a closer look on my indicators. Okay, so let's click over here and make it a full screen, so it's gonna be easier to understand what's going on here. So as you see, my top 5 indicators are Bollinger Bands %B, Stochastic RSI, Williams %R, and MACD. Okay, so this is basically the indicators which I'm using for buying and opening orders. But again, keep in mind that none of these indicators will give you 100% correct information about the exact spot to buy or sell. Okay, so they are just giving you some information about the expectation of the market trend. Now I'm gonna give you a quick explanation how I'm using these indicators and how I'm reading them, and after I'm gonna give you an information about what's saying the book about them. Okay, so let's start with the Bollinger Bands. So this is the very first chart over here. You see there is a blue border on the top and a blue border on the bottom. So when I'm planning to buy, right, I'm looking for some situation like here where the main chart going up below the bottom border. Okay, so there's a spot over here, and over here. Okay, so this is a good time to buy this coin. Okay, because after that, more likely price for this coin will go up. Okay, so as you see, this is going on over here. Same story over here, and the same situation over here and over here as well. Okay, and the opposite situation when the chart is going out over the top border of the Bollinger Bands. Okay, so that says us that the price will go down after this. Okay, but again, my strategy is more like scalping. So every time when I'm opening an order or buying some coin, I'm setting up just a 1% profit. So basically I'm not waiting for the price to go up here, or I'm not checking when the chart will cross the top border of the Bollinger Bands. Okay, so for me it doesn't matter, I'm more looking for the bottom spot. Okay, so this is about the Bollinger Bands. Now we have Bollinger Bands %B. This is a variation of the Bollinger Bands. This is a second chart over here, and we have 2 dashed lines, one on the bottom and one on the top. And again, we have this green line over here. So what I'm looking here is when this green line crossing the bottom dash line, and let's say our line is over here, over here, over here, over here. So this is the time when I'm planning to buy. Okay, but again, never consider to buying the price only because one chart showing you that this is the good time to buy. Okay, so you have to consider all these 5 charts, because it could be a situation when you have this line on the Bollinger Bands over here down below the bottom dash line, but on the Stochastic RSI the chart is over the dash line. Okay, so I wouldn't buy over here. And again, the opposite situation when the green line is going over the top dash line, so that means that more likely the price will go down after this. Now we go into third one, which is Stochastic RSI. So again, there are two lines over here, the blue and the red. Well, you can change the color, so it doesn't matter. But the thing is, again, when the two lines are below the bottom dash line, that means that the price more likely will go up. And the two lines are over the top dash line, so that means that the price more likely will go down after this, okay? And again, be careful when the lines are getting to the middle between these two dash lines, okay? So over here, many times the price can go back again. So if the lines coming down from the top, getting into the middle, so they might go back to the top again. Or the same could happen when your lines coming up from the bottom, getting to the middle, let's say over here. So from the bottom, they going to the middle, and after they can change and turn back to the bottom again. Okay, so keep in mind, because this is happening in all three of these indicators. Okay, now let's go into the Williams %R indicator. So again, everything is similar. I'm waiting for this line to go down below the bottom dash line, and this is the time for me to buy. Okay, and when this line is going over the top dash line, so that means that the price more likely will go down after this. Okay, so I wouldn't buy over here or over here or over here. So basically I'm looking for the spots where the indicator is over here, somewhere over here or over here. Okay, and the very last one is the classic MACD. So basically over here you have two lines which are crossing each other from the bottom or from the top, and you have also the histogram, which is green when the price is going up and red when the price is going down. Okay, so over here again, I'm checking when the blue line is crossing the red line from the bottom. That means that that's gonna be uptrend, and when the blue line is crossing the red line from the top, that means it's gonna be downtrend. Okay, but keep in mind with the MACD you'll have a little delay over here, so basically it shows you a little bit later than it has to be. Okay, so this is more like an additional indicator for you. Okay, so usually when I see that this histogram is going down here and after starting to go back, that means that the good time for me to buy this coin. Okay, and also I'm comparing that with this indicator over here, which is on the bottom, this indicator over here, and this indicator over here. Okay, so basically you could have bought this coin over here, okay, expecting the price to go up. And as I'm usually putting only 1% profit to close my order, so that's enough information for me to buy at this spot. All right, now I'm gonna show you the settings of each of my indicators. Okay, so let's go into the Bollinger Bands, click over here, and as you see I'm using length 21, multiplication 2, output, the colors you can change over here, no matter, and precision is 2. Okay, now we go into Bollinger Bands %B, click over here. As you see, the precision is 2 as well, and inputs, the same inputs over here, so the length is 21 and multiplication is 2 as well. All right, now we go into Stochastic RSI. My settings here are length RSI is 13, length stochastic is 13, smooth K is 3, and smooth D is 3 as well, and precision over here is 2 also. Okay, now we go into Williams %R, precision is 2, inputs, my length here is 13. Okay, and in the MACD I have fast length 13, slow length 34, source is close, and signal length is 8. Okay, and in my style precision is 2 as well. All right, and just a quick notice, in all my settings I'm using only numbers from the Fibonacci sequence. Okay, well, I'm not gonna say if that is correct or wrong to use the Fibonacci numbers in your settings, but as I know, we have a lot of Fibonacci numbers around us, so I'm just trusting them. And if you don't know what is Fibonacci numbers, you can check it in Google, or let's have a quick look. So the Fibonacci numbers is the Fibonacci sequence in which each number is the sum of the two preceding ones. So the Fibonacci sequence is gonna look like this. So you start with 0, after 1, After sum of 0 and 1, which is 1. After the next one is the sum of the previous one, so 1 plus 1 is 2. After 3, 5, 8, 13, 21, 24, and so on. So as you see, in all my settings, I'm using only numbers from this sequence, okay? Now let's talk about all those indicators in the meaning of the book. So let's go into the Bollinger Bands. So how to use the Bollinger Bands in trading. Although the Bollinger Bands are widely used in traditional financial markets, they may also be used for cryptocurrency trading setups. Naturally, there are various ways to use and interpret the BB indicator, but one should avoid using it as a standalone instrument, and it should not be considered an indicator of buying-selling opportunities. So I told you, every time when you are using Bollinger Bands, you have to consider another indicators as well. So preferably, BB should be used along with other technical analysis indicators, okay? With that in mind, let's imagine how one could potentially interpret the data provided by the Bollinger Bands indicator. If the price makes its way above the moving average and exceeds the upper Bollinger Band, it is probably safe to assume that the market is overextended overbought condition. Or else, if the price touches the upper band multiple times, it may indicate a significant resistance level. In contrast, if the price of a certain asset drops significantly and exceeds or touches the lower band multiple times, chances are the market is either oversold or found a strong support level. Therefore, traders may use BB along with other T indicators to set their selling or buying targets, or simply to get an overview of the previous points where the market presented overbought and oversold conditions. In addition, the Bollinger Bands expansion and contraction may be useful when trying to predict moments of high or low volatility. The bands can either move away from the middle line as the price of the asset becomes more volatile, or move towards it as the price becomes less volatile. So the Bollinger Bands are better suited for short-term trading as a way to analyze the market's volatility and try to predict forthcoming movements. Some traders assume that when the bands are overexpanded, the current market trend may be close to a consolidation period or a trend reversal. Alternatively, when the bands get too tight, traders tend to assume that the market is getting ready to make an explosive movement. When the market price is moving sideways, the BB tends to narrow toward the simple moving average line in the middle. Usually, but not always, low volatility and tight deviation levels precede large and explosive movements, which tend to occur as soon as the volatility picks back up. Okay, now let's read about the day trading Bollinger Bands short term. Since many retail cryptocurrency traders prefer day trading, here is how Bollinger Bands is applicable in uptrends and downtrends. So uptrends, the indicator can show you the rally strength and when it might reverse or lose strength. If the uptrend is strong enough, it tends to touch the upper band regularly. The uptrend that reaches the top band suggests that the cryptocurrency continues to grow and traders may continue with the bullish sentiment. At some point, the price might retreat to a certain level. If it pulls back but maintains about the SMA and then rebounds toward the upper band again, it indicates plenty of strength. The point is that the price action should better not touch the lower band during a rally. If it does, then it is a sign that the uptrend is losing strength and may reverse. Most day traders aim to benefit from strong upward trends before the first sign of a reversal. If the cryptocurrency fails to touch a new high, traders will close the position to prevent losses. Hence, Bollinger Bands are a great indicator to monitor up and uptrends state to measure its strength or weakness and anticipate a possible reversal. Downtrends. In downtrends, traders use Bollinger Bands to measure a bearish move strength and when it might reverse to an uptrend. If the downtrend is strong, the price will move very close to the lower band. Naturally, it suggests that selling activity maintains high. Once the price fails to touch new lows and move along the lower bands, it is a strong signal that the bearish trend is losing momentum. Under these circumstances, short sellers would exit their positions. In a bearish market, traders would interpret it at the strongest signal of an upcoming reversal if the price reaches the upper band or breaks above it. Many traders don't prefer to trade during downtrends, as most cryptocurrency aims to expand their market valuations in the long run, so they'll feel like trading against the general trend. They choose to monitor bearish moves only to search for opportunities to buy the deep. Bollinger Band variations. Cryptocurrency traders can also use Bollinger Band variations such as Bollinger Bands width and Bollinger Band %B, which is in my situation. So the Bollinger Band %B is an indicator that quantifies where the crypto price is relative to the bands. Thus, when %B is about 1, it suggests that the price is about the upper band. When %B equals 1, it means that the price is at the upper band. When %B is about 0.5, it suggests that the price is above the middle band. When %B is below 0.5, it means that the price is below the middle band. When %B is equal to 0, it shows that the price is at the lower band, and if %B is below 0, it means that the price is below the lower band. The %B resembles an oscillator and is shown below the main chart. It helps traders identify trends and signals. Okay, now let's go to Stochastic RSI. How to use Stochastic RSI. The Stochastic RSI indicator takes on its greatest significance near the upper and lower bounds of its range. Therefore, the primary use of the indicator is to identify potential entry and exit points as well as price reversals. So a reading of 0.2 or below indicates that an asset is probably oversold, while a reading of 0.8 or above suggests that it is likely to be overbought. In addition, readings that are closer to the center line can also provide useful information in regards to market trends. For instance, when the center line acts as a support and the stochastic RSI lines move steadily above the 0.5 mark, it may suggest the continuation of a bullish or upward trend, especially if the lines start to move towards 0.8. Likewise, readings consistently below 0.5 and trending toward 0.2 indicate a downward or bearish trend. Now let's go into the Williams %R. So how to trade using Williams %R. Williams %R is a versatile oscillator and yields many uses. It has a variety of patterns which provide fruitful buy and sell signals, buying oversold and selling overbought. One of the advantages of the Williams %R is its clearly defined overbought and oversold levels. When an asset is oversold and below -80, a trader can buy once the market crosses back up about -80. In overbought conditions, a crypto trader can wait to sell until the crypto market crosses below -20. And for the last, let's go into MACD. So how to read MACD charts. As the name suggests, the moving average convergence-divergence indicator tracks the relationships between moving averages, and the correlation between the two lines can be described as either convergent or divergent. Convergent when the lines gravitate towards one another, and divergent when they move apart. Still, the relevant signals of the MACD indicator are related to the so-called crossovers, which happen when the MACD line crosses above or below the center line, or above or below the signal line. Keep in mind that both center line and signal line crossovers may happen multiple times, producing many false and tricky signals, especially in regards to volatile assets such as cryptocurrencies. Therefore, one should not rely on the MACD indicator alone. So the same as I was saying before. Centerline crossovers. Centerline crossovers happen when the MACD line moves either on the positive or negative area. When it crosses above the center line, the positive MACD value indicates that the 12-day EMA is greater than the 26-day. In contrast, a negative MACD is shown when the MACD line crosses below the center line, meaning that the 26-day average is higher than the 12-day. In other terms, a positive MACD line suggests a stronger upside momentum, while a negative one may indicate a stronger drive to the downside. Signal line crossover. When the MACD line crosses above the signal line, traders often interpret it as a potential buying opportunity or entry point. On the other hand, when the MACD line crosses below the signal line, traders tend to consider it a selling opportunity or exit point. While the signal crossovers can be helpful, they are not always reliable. It is also worth considering where they take place in the chart as a way to minimize the risks. For instance, if the crossover calls for a buy but the MACD line indicator is below the center line or negative, market conditions may still be considered bearish. Conversely, if a signal line crossover indicates a potential selling point but the MACD line indicator is positive or above the zero line, market conditions are still likely to be bullish. In such a scenario, following the sell signal may carry more risk. MACD and price divergences. Along with the center line and signal line crossovers, MACD charts may also provide insights through divergences between the MACD chart and the asset's price action. For example, if the price action of a cryptocurrency makes a higher high while the MACD creates a lower high, we would have a bearish divergence, indicating that despite the price increase, the upside momentum is not as strong as it was. Bearish divergences are usually interpreted as selling opportunities because they tend to precede price reversals. On the contrary, if the MACD line forms two rising lows that align with two falling lows on the asset price, then this is considered a bullish divergence, suggesting that despite the price decreasing, the buying pressure is stronger. Bullish divergences tend to precede price reversals, potentially indicating a short-term bottom from a downtrend to an uptrend. So basically this is the whole information. As for me, I don't like all these literature things, okay? So I explained at the start how I'm reading each indicator I'm using for trading. So basically I'm considering always only the entry points and setting up 1% profit for the exit point, okay?